Morning. This is actually quite an interesting topic. So I'm going to quickly run through a round of introductions, and then we'll just deep dive into our discussion. I'm Neha Wadhwa, ex-banker, ex-private equity professional, moved into the crypto space. New economy is what I like to call it, and now I help people with building communities, raising funds, everyone who's building on the new economy, which is in the distributed space, where it's not primarily centralized. I mean, it's not completely distributed, but not completely centralized either. I'll let everyone introduce themselves.
Sure. Thank you, Neha. So my name is Tushar. I work for Lunex Ventures, which is the crypto venture capital arm of a traditional VC called Golden Gate Ventures. So Golden Gate has existed since 2011. They're on their third fund, investing primarily in seed and Series A startups in the Southeast Asian region. With Lunex, we have a much more flexible mandate, so we're looking at blockchain and crypto startups globally. We can hold tokens, we can invest in equity stakes. So we're trying to be trying to make sure that venture capital, if it does get disrupted, we're still at the forefront of it.
Okay, well, good morning, everybody. My name is Rennie. I actually am a CryptoFund advisor as well as a manager. So I'm an ex-banker as well from Citibank. So I used to do the traditional FX, equity, leverage, mortgage, corporate, LCs, what have you. But however, today I'm here as a crypto advocate. So I also fund the Crypto Valley Singapore. I take that. Well, that is a not-for-profit foundation where I actually share more about blockchain and why you should adopt blockchain in general around the region. I'm based in Singapore, but I travel a little bit to share a little bit more with the grassroots level to the business to business as well as some government interaction. So it's my pleasure to be sitting amongst really big mountains here.
Hey, I'm Tom Howard from Taureon Capital. So we're a long-term VC fund. It's our second fund. We're a 7-year fund. We invest mostly, we're looking for tokens with very good structure, accretive token models. We've been investing in the space since early 2017. Been involved with a lot of the big ICOs of last year. And looking forward to all the cool stuff that's being built right now.
Good morning, everyone. My name is Seth Melamed. I'm with Liquid. I'm head of business development. I'm also an ex-banker. I spent about 20 years working in capital markets, past 11 at Goldman Sachs, where I started really learning about blockchain. And I attended my first blockchain conferences in 2014, and it's really wonderful to see the growth of the industry and the interest in investors and participants. And at Liquid, what we're doing is we're a cryptocurrency exchange, and we're really starting to expand our offerings to cover more broader-based financial services, such as custody services, some derivatives, structured products, and actually working with merchant services to help spread the adoption of crypto into mainstream. Thank you.
Very interesting. So most of us are bankers in this panel, ex-bankers. So obviously the first question is, what's different? Like, how has life changed from pure play fiat to now a crypto space? And let's just sort of run through, what's the feeling? Like, how has it changed? Do you want to start first?
Change from traditional equities?
So basically, the whole investment space, like if you were a banker or a private equity professional earlier, how has the vibe changed? Like, what's different in the whole crypto space as far as the atmosphere of investing is concerned?
Mm-hmm. Do the bankers want to start?
Go for it. Yeah.
Okay, I think it sounds like things have changed just over the last 20 months or 24 months, quite a bit. I would actually segment everything in a 6-month kind of category. This half of the year, first half of this year, and last half of last year. So the speed that we are going at blockchain is phenomenal. Every 1 month is like 3 months. In my 10 years, close to 10 years of finance background experience, I've never seen money being raised so fast, equity rising going like 1,000 times. I mean, it's unheard of. The stock exchange will probably question you who's behind it if you actually do that. You're supposed to do forecast. every quarter, okay, do a forecast, and 2 months or 1 month before the close of the quarter, you're supposed to adjust, okay, make public announcements. You cannot just have a big jump, okay. The stock exchange regulators will come after you, and they'll ask, and then they start questioning. So that's one big thing. So price changes and multiplications of your capital for your equity is just phenomenal, I must say. Yeah, I'll leave that as that, and then if maybe somebody else want to take over.
Yeah, I agree. This is a rapidly changing environment. I think one of the biggest changes from last year is 95% of the funds investing in crypto, and particularly in ICOs, were structured as short-term funds, hedge funds. So they had a 3-month reporting window, and their mandate was basically that they needed to get liquidity on all of their investments within 6 months. And that's what they raised money on. The whole thing was like, oh yeah, ICOs bring you quick liquidity so you can make short-term bets. That was during a very short speculative phase of the market. And it actually it was possible to get that sort of liquidity. These days, it's not possible to get that liquidity in such a short time frame, because startups, at the end of the day, it takes at least 2 years for you to really see anything come out of it. And it just doesn't make any sense to have any liquidity within 6 months. There's nothing to show yet. So what we're seeing now is most of these, 95% of these crypto funds, they can't even invest in startups because they don't have a guarantee for liquidity. So right now, there's a bit of a capital crunch at the seed stage. And that's actually one thing that we raised our fund to address. All the ICO flippers are gone. They're not investing in seed stage anymore. And so that's why we focus on seed stage. There's not that many people are doing it, because you have to take a long-term time horizon in order to actually make money doing this. So, yeah.
I just want to jump in and echo whatever Tom said. So the way we're structured at Lunex, we're pretty similar. So it's a 5-year closed-ended crypto venture capital fund, as we like to call it. So we like to jump in at the seed stage level as well and sort of back startups early. So the way we look at our portfolio is kind of 3 buckets of investments. So we look at the first bucket is kind of the equity bit, where we get into companies from Southeast Asia where we have a network and a brand. So those are mostly seed stage deals. The other kind of equity deals that we look at are kind of later stage deals, companies that are coming from the US and Europe, looking at Asia as a strategic place to do business, and are on the lookout for a long-term strategic partner / investor in Asia. So that's kind of where we jump in on the equity bit. But there is a liquid, so this component of our portfolio is relatively illiquid because these seed stage deals take a little bit of time to mature. The second part of our portfolio is a little bit more liquid, where we look at some of the larger cap cryptocurrencies and also, some ICOs and STOs and everything else, if it makes sense to us on a deal-by-deal basis. So in terms of your question, to answer your question, how has the market evolved? I think in terms of traditional VC, you'd have 10-year funds where everything's illiquid, whereas now you have a liquid portion, which is the tokens, which are traded in the secondary markets, and you could have potentially an illiquid bit as well. In terms of another big difference that has happened is how has it changed for retail investors, right? So retail investors today, and I think for the first time in history, have access to certain assets which the VCs are looking at as well. So traditionally, if you wanted to invest in, like if you look at some of the bigger startups in Southeast Asia, there's Gojek, there's Carousel. These are some of the startups that are Grab that have done extremely, extremely well. If as a retail investor you wanted to invest in Grab, it was really, really difficult, and you had to be really well connected to get hold of some Grab shares. Whereas if Grab, in the crypto ecosystem, if there was an equivalent of Grab, and as a retail investor you fundamentally believed in this company longer term, you could actually take a stake in that company. So I think that's a big shift from sort of the traditional world moving into the crypto world.
So I want to touch on a slightly different topic than my colleagues. So from my perspective, what we're seeing at Liquid, where we've sort of created a platform for helping startups in the blockchain space raise capital, is we're seeing a real shift in sort of the caliber of projects that are going forth to markets to raise capital. And specifically what we're seeing is that existing ongoing businesses that are now trying to create a blockchain to supplement their existing business are now starting to raise capital, by doing token sales. And what we're seeing is that is also a narrowing of the field, because these types of entities, they already have an operating record. They may even already be traded on a public market somewhere in New York or Hong Kong. And we're seeing that actually, there's sort of maybe less people going out to the capital markets to raise funds, but some of the projects that are doing it are better equipped to actually build a business and provide longer term value to the potential token holders.
I agree, actually, great points, because it's funny you say that, because what I've realized is, and I'm working with a few guys in India, traditional private equity guys are now opening up their space to now get a wider member network. So earlier, it's not just for the crypto space, but even early stage private equity funds are kind of saying, hey, we're not just going to look at institutional LPs, we're actually going to open it up to a community. And that is actually a great shift, because why should it just be limited to institutional equities, right? Also, token sizes are now reducing, the ticket sizes for every investment. So that's a great perspective. Going forward, what I wanted to understand is, in terms of economics, do you see any evolution in the business models that are coming up? And also the kind of investment thesis that one would adopt when you're evaluating an opportunity in this space. Like earlier, from what I understand, it used to be, okay, reputation, of course, of the person of the founders, because earlier seed stage investing, right? Reputation, market analysis in terms of what market are they catering to, are there any, your standard investment sort of analysis. Is there an opportunity for scalability? How are people going? How is it different from the existing players? What are the value add? This is a whole open space. So how is it, like, what are your investment thesis points that you'll look at?
So I guess the point is more like how do you actually select a project that is worthy to put your money in? Am I right to say that? Can I paraphrase it in that way? Okay. So I guess really it's very fundamental. First of all, I think you need to identify the stakeholders in a typical, all the actors in an investment. First one is yourself. A lot of people don't evaluate themselves. So you look at yourself first, and then the project. So I'll just look at it as like a butterfly. Okay, so there's left wing and right wing. Not from the political point of view. Okay, so first, I mean, you look at yourself. I mean, what do you need? First one is your time horizon. Okay, your exit strategy. Very important. Most people know how to go in, but don't know how to get out. I would say your risk appetite. Okay, and then I would say with this few questions, you got to ask yourself, what's your expectation as well? Are you going in for the short term, means day trading, medium term, or long term? So these are some questions you got to ask yourself first. Why am I investing this money for? Am I using this money as my daily bread and that I got to risk everything, or is it something that I can put aside and I can maybe 1 month or 2 months of my annual salary, I can afford to lose this? Okay, so this is just yourself first. And it's not a knee-jerk reaction whenever something happens. You have to have some spare cash. That's yourself. Okay, now the other side of the equation is the project. So from a project perspective, I just use a very simple acronym as well. Also both known as HERO, H-E-R-O. First one, is it honorable? Is the project, has it got ethics? Or is it a money grab? So interviewing the founders is very, very important. I used to read the white papers first. Then after that, I say, hey, since I got access to the founders, which in the traditional traditional investment site, trying to get to the CEO of an IPO company is almost impossible. But right now, with Telegram, you can actually interview and have a chat with the founder, co-founder. So have a chat with him. And then you can actually understand, whether what's his moral compass? Has he got business ethics? Or, oh, how's your revenue going to be? Oh, how's your profit? Oh, my profit is going to come from the money raised in the ICO. That was one actual example that I got. Right?
Are you serious?
Yeah.
Oh, okay.
But I don't want to mention from where, but this is some of the actual response that I actually get. So it's crazy thinking that the ICO fundraise is actually my profit. That's crazy. So that's something that you don't see on your white paper. Okay, the exponential or the scalability of the project as well. Is it just focused on a country level, or is it going to go regional or international? As soon as you hit the internet, basically it goes viral. It's supposed to go international, not just on a local level. If it's a local level, then it's a mom and pop internet e-commerce, maybe. Maybe not even e-commerce. Right. Well, I'll stop there for now. I'll leave the floor, leave some space for the rest. Yeah.
Yeah. So I think in terms of selecting projects, we don't try to complicate things too much. We try to invest in things that make sense for us today. So I mentioned earlier that we have sort of 2 or 3 components to our investment strategy. So we have the equity bit, which is illiquid, and we have the tokens or the cryptocurrencies that are liquid. As far as the equity bit goes, we want to invest in companies that make sense. So things like smart contract auditing, crypto accounting solutions, staking as a service, custody. So, I mean, these are sort of solution providers or businesses that if the industry in general survives, every other individual or company is going to require these services. So you could literally call them sort of blue chip companies within the crypto ecosystem. So those are the companies, and these companies typically don't need tokens, and so they try to raise financing through traditional venture capital means. So that's a sweet spot for us. In terms of the crypto landscape or the tokens, so I think one of the core areas that we really like is and this is beyond going some of the bigger cryptocurrencies, right? So going beyond Bitcoin, going beyond Zcash, going beyond some of the protocols that a venture capital fund or any fund that might invest in. I think decentralized finance is something that's pretty interesting. So basic stuff like lending, borrowing, keeping crypto as collateral, keeping fiat as collateral, keeping traditional assets as collateral. I think there's some very, very interesting projects that are coming about in the borrowing and lending space. I think derivatives is derivatives on top of crypto is again something that is super interesting. There are a lot of decentralized exchanges and decentralized exchanges protocols that are being built. So in general, some of the projects, I mean, if I were to throw out names that I am deeply researching or thinking about, so DYDX, Kyber Network, Compound, Dharma Protocol, I think these are some of the projects in the decentralized finance ecosystem that are super, super interesting for us.
Yeah, I mean, when we're looking at equity, it's a normal team, tech, traction, that sort of thing. When we're looking at tokens, there's this whole other aspect of tokens. And so our primary metric there is percentage of value capture. So when we look at a lot of the utility tokens that ICO'd last year, we estimate the percentage of value capture there is between 0 and 1%. So in other words, those tokens are massively, massively overvalued.
Could you actually deep dive? Because that's very interesting. What do you mean by percentage of value capture? Because I've never heard that term before.
So if you have a very high velocity payment token, it's not going to be worth nothing, but it would be worth a fraction of the actual revenues in the business, right? Because you could actually use the same 10 tokens to make $100 million worth of payments, right? And those tokens might just be worth $1 each. So in that case, you'd have $10 worth of tokens running a $100 million business. Yep. So that's when we have to do some modeling to figure out, all right, what's the percentage of value capture? And most of the utility tokens that we see out there are in that 0 to 1% range. So we're looking for things that are much higher, above 50%, maybe more towards like 90%.
More like an asset-backed security that's actually with some tangible.
We're not very interested in security tokens. We see it as like it's a minor efficiency. It's a significant efficiency, maybe 10 to 20% efficiency on securities, but it's not disruptive. So we're looking for completely different token models, something more along the lines of a continuous organization model. I don't know if you've looked at that. But essentially, we're looking for decentralized networks. We're looking for a network that can compete with Fortune 500 companies, but in a completely decentralized way, and doing that using token incentives.
That actually sounds very good.
That's our main focus. We're looking for truly disruptive tokens.
Could you actually, sorry to jump in, but could you give examples of some of these companies?
Oh, we haven't seen it yet. Okay. So yeah, we're still looking for it.
Still waiting. There is hope.
We have a couple of hypotheses. I mean, Ethereum is potentially one of those, right? Because it's a world computer. It's still a prototype, so it still needs a lot of work. But yeah.
Got it. So we have like 3 more minutes. So last question. So I'll wait for you, and then last question. We wrap up.
I don't think I'm going to have any thesis that's going to defeat Tom's suggestion there. That's great. But I would just look at it from a slightly different angle. So Liquid, Quoine, we're a licensed exchange, so obviously that's always top of mind for us. So one of the things we look at, if you look at the messaging coming out from the regulators, specifically the SEC in the US, they say, you know, what is the utility of this token? And so as I see when we do our vetting and we look at projects that we're going to participate in, one of the first things we look at is there a day one utility for this token? And I find that we're starting to partner with those types of projects. And there's a really good reason for that, because projects that really have a utility, it's not only an economic standpoint, but it's also a regulatory benefit. So a good example would be a project we're working with based in the US, where they've actually gotten some sort of indication that there would be a no action for their ICO token. And the reason for that is that on day one of issuance of their token, there's actually a floor value for a service or a good that can be used for that token. Not just selling it for another token, basically. So an example could be they could use that token and then they would have the rights to use a certain amount of photographs that have been copyrighted and have at least like a period of time where they can use at least one photograph for one token, right? Or, you know, one token for one song. And so these are the types of projects that we're starting to focus on, because where there's a direct correlation between the value of holding the token and a service, we think that's a more sustainable business model that will have better interest both in terms of developing an ecosystem as well as creating value for the overall holders.
Great, thank you. So just to wrap up, one last question. What does the wealth of the future look like? I mean, we're sort of moving away from just fiat to now holding a whole bunch of different types of assets at an individual level, which is very different from the way things were before. I also feel that there is a big shift in terms of just who we are and the fact that our data, which is our digital footprint in terms of what we sort of share online, is something that should be owned by us, not by a centralized, like not by someone who's sort of capturing all our information and then sort of using it in terms of positioning things to us. So I do see advertising also kind of shifting, where if we're sharing our data with someone, it's per our consent, and I feel that the ledger tech, distributed ledger tech, enables for that. Also, if I want to share my data, it's actually wealth, so I should be earning money for it. That's a big shift that I see in terms of wealth management. But apart from that, how do you see wealth being different? And short answers, because we're like running short of time.
Sure. So, I mean, not to speak about the data bit, but I think in general, and maybe I'm just too optimistic, but I think, you know, a couple of decades from now, there's going to be enough sort of money for everyone. I mean, and maybe it takes 30, 40, 50 years, but yeah, I think where I'm getting at is the concept of universal basic income, and crypto sort of being a tool to achieve that. And again, in general, that leads to a situation where people basically work on things that they want to work on. Yeah, I mean, I think it's a very difficult question to answer in terms of like how wealth management looks like. I think you could take this kind of question in multiple ways, right? That you could talk about tokenizing of assets, and that from that perspective, wealth management looks completely different, where you could own fractions of art pieces and fractions of real estate that no one else can own, and things like that. But in general, I think wealth management would, I guess let me be more specific with that. I'm specifically talking about the screenager sort of space, the millennials who are constantly on their screens. How are they going to adapt to a space like that? And what do you see wealth becoming for them? Like that perspective.
Okay, in my observation of what's happening and my future of what I see is going to happen, I think number one, I think the current stakeholders that are going to be very, very heavily involved are the millennials. So, but having said that, I'm still living in this era, the same generation as them. So I think decentralization means, to me, empowerment. These are very big words. What does it mean? Empowering the individuals as opposed to an institution holding the central power. So the power will be in our hands. Example, I don't need a bank to hold my money. I have my phone, and I can keep my e-wallet here. So I don't need an institution or a trustee to actually hold my money on my behalf, or a bank or custodian. I can hold it in my own wallet. With that, there also comes a balance, and that balance is personal responsibility, personal education. You don't leave it to somebody else and then try to pass it on to your secretary to do the job for you to go to the ATM machine. Okay, so that's still ongoing in some of our neighboring countries. So you have to do everything yourself. So gone are the days of the typewriter or dictation where you got a secretary to type out your email. Today you got the email, the advent of email, so you do everything yourself. So that's empowering to yourself. So another example would be, in this audience here, how many of you are trained in accountancy? Anybody? Okay, one, accountancy, in accounting, okay, good. Legal, anybody from legal? Legally trained? Okay, so through this occupation, effectively, if you use fundraising going through IPO, then only this gentleman and this lady will be participating in the preparation of your prospectus. The rest of us cannot participate in trying to bring a company to IPO onto the stock exchange. However, with blockchain, it's very different. Every one of us here is capable to do fundraising. Every one of us here is capable to have a project of our own. And every one of us here has an opportunity to earn that couple of $1 million in the right way. That's empowerment. Thank you.
So when thinking about millennials and their wealth management, they're very digitally native, right? So Messenger and digital apps is where it's at. So we see products in the US like Wealthfront or Robinhood or Acorns. And I'm sure there's a Singaporean version whose name is slipping my mind. Those are for very easily managing your stocks and other investing assets, right? We're seeing some products coming like that in the crypto space. So there's a product called Flipster, which is an easy interface, just like Robinhood, but for managing all of your crypto investments. And I think we'll see more of that. So I think that adoption really does come from a really easy-to-use app for the consumer. As far as like crypto assets themselves, right now they're an alternative asset class, a niche asset class. So nobody's going to put the majority of their portfolio into crypto because it's part of their high-risk bucket, right? In order for crypto to be a widespread asset that people put majority of their wealth into, I believe we need to see some sort of black swan event, either a negative black swan, which happens very quickly, or a positive black swan, which typically happens over a longer period of time. And that's kind of why we look towards assets that are resilient towards those sort of effects. Bitcoin is theorized to be a flight to safety. Bitcoin has never lived through a proper downturn, so we don't know what happens when that happens. But that's also the reason that we look towards these innovative token models, because we theorize that when people get laid off, they'll be able to go work for the blockchain more or less and participate in these decentralized organizations. So we think that they're actually anti-fragile to negative black swans. So that's kind of where we see things going.
Great, thanks.
I want to take a slightly different tack. So I look at what's going on with wealth management, and I just had a question for people. How many of you guys use like one of those Trezor hardware wallets? Right. And does anybody actually enjoy using these things? Okay. All right. Listen, so I think one of the big issues we have in the industry right now is it's all linked to lack of real institutional participation in this asset class. And there's a lot of reasons for that, but I think one of which is that the structures that we would have in a traditional equity or fiat market, where you have real custodial structures that people believe and trust in and are scalable, they don't really exist for digital assets at this point, right? You can use the Trezor and maybe it's okay, but if you lose the Trezor, you're kind of out of luck. So I think what really is going to help the sort of wealth creation in this industry is be able to have like larger scale institutions like BlackRock, Fidelity. Some of these people will really be able to apply capital to the space. And for that to happen, I think we need to have better development of the actual structures, specifically things like custody, so that a big fund manager, they don't have to worry about one guy with the private key that's in a safe somewhere in the office, but they are working with trusted institutions that have custodial solutions that fit within a blockchain context and cryptographic assets. And so when you have that developed, then I think you'll have more investment in the space and following more development in the space as well.
I agree. And I think the number one thing to look out for that will trigger a wave of capital coming in is insured custody. So if you have a custody product that's fully insured, it's risk-free for the BlackRocks and the Fidelities to come in. And I think that's going to be the thing that not only gets them to come in, but also allows the SEC to approve things like Bitcoin ETF.
Yeah. Absolutely. So actually, in fact, one of our first investments is a custodial solution.
Awesome.
Where the insurance, I think, is still a little bit expensive. The prices have come down significantly, despite all the hacks. Because I think some of the larger institutions have started wrapping their heads around how to actually go about underwriting the insurance for these kind of custodial solutions and exchanges and things like that. But yeah, I think it's coming. It's still going to take a little bit of time. I think even from a regulatory perspective, and not to speak on behalf of MAS, but I think they're kind of very open to having such sort of custodial solutions based out of Singapore as well. And I know some of the other jurisdictions are kind of looking at having their own custodial solutions, including some of the sort of traditional financial centers like Switzerland, like Luxembourg.
Thank you, gentlemen. This was awesome. We're about 10 minutes over time, but I think everyone enjoyed the discussion, so it's totally worth it. Thank you, everyone.